Hey y'all, Jesse K here, buildingdc.com, to talk about today's conference. I know I posted something a little bit earlier this morning to fill the gap for the day, so when people came to the site, they wouldn't see a blank video screen. But this is going to be uploaded this afternoon. I hope everyone has a chance to watch, and I might leave it up late into the day tomorrow. So any of you that don't have a chance to see it on Tuesday will have a chance to see it Wednesday morning. But the long and short of it is that Tom Fiddler, I would assume is a spokesman for Countrywide, did a spectacular job describing the mortgage market. Quite frankly, conventional loans, both first and second markets are terrible right now. First-time buyers, second-time buyers, refinancers, the loan-to-values, which is basically the amount the bank is willing to lend against the overall appraised value of the property, have decreased significantly, understandably so. I mean, we've gone through obviously a huge crisis over the last few, 2 or 3 years. Prices are falling, and Fannie Mae and Freddie Mac are unwilling to underwrite 95 or even 90 or even 95% financing in what's declared a declining housing market by the appraiser that appraises the property. So obviously, being in the business myself, and a lot of the lenders out there are in the business of making money and obviously paying their bills, and I would assume a lot of them are fully commissioned as well. But the long and short of it is that we're looking for options. There are buyers out there looking to purchase their homes. There are sellers out there that are looking to sell, and there are, an entire infrastructure of contractors and lawyers and settlement attorneys and realtors and loan officers and appraisers and home inspectors that this entire crunch has affected. So as we look for new opportunity, FHA seems to be the strongest opportunity out there to stabilize the real estate industry and help bring prices back up. But a lot of the things that Tom talked about today might be known by some of you, but I would assume that most people don't know about some of the benefits of FHA. First of all, DC right now is considered a declining housing market. Obviously, there are properties anywhere that could be considered stable, but for the most part, DC's been pretty well taken as a declining housing market. Obviously, we go back to the fact that DC has fared very, very well compared to the rest of the country. But if we look at underwriting standards right now, I think the highest loan to value that people can get is about 90% loan to value, which requires buyers to put a 10% down payment. But if we look at opportunity, we're looking at FHA standards. Now, FHA obviously is completely different from conventional, but some of the big benefits that I'm going to be talking about today, but I'll also have a guest speaker on next week to talk more in detail about it. But some of the big benefits are: one, 97.75% financing for condos. For properties. FHA approved properties are 97.75%. Two is they allow 6% seller concessions. Now, what's even better for some of you home buyers out there is that FHA allows an unlimited amount of money, of down payment assistance, to come from a nonprofit company based solely around assisting buyers with down payments. Now, it gets kind of tricky, but the way the nonprofits work is that they require the seller of that same property to give to them the identical amount of money that they're crediting the buyer at settlement. So in essence, basically, at settlement, at the exact same moment, the sellers are giving to the nonprofit a certain amount of money. At that exact same moment, that nonprofit is giving the buyer that exact same amount of money, and they charged somewhere between $200 and $500 fee. Some of the big programs out there right now are Ameridream, Nehemiah, and I think a Baltimore-based one that I've heard come up quite recently is the Genesis program, all of which basically allow the seller to credit the down payment to the buyer. But what I didn't know today from Tom was basically the fact that the down payment assistance is unlimited, and it's based on the appraisal value. So let's say a buyer who qualifies for FHA is going to buy a $100,000 home. The loan amount is $70,000, which they've contracted, and the buyer asks for $30,000 from the seller to grant into a nonprofit company that will then get transferred to the buyer all on the day of settlement. Total sales price was $100,000. The seller got what they want. The buyer is only financing $70,000, and the seller put that $30,000 into the nonprofit, which would net them obviously something significantly lower than the sales price. But it was a win-win for everyone, and chances are that buyer now has a lot of equity in that property. Now that $100,000 obviously is determined by the appraisal value, but it's still an opportunity to get in. Now, FHA is also approves 1 to 4 unit buildings. So if you're a buyer out there interested in your first investment, or you're interested in a property where you can live in one of the units, owner-occupied 4 units, FHA is a great place to go right now. And I don't know the exact number, but I believe that a single unit starts at $732,900, and the increases go up from there. I'll have Layla talk about it next week, but if you can imagine purchasing, let's say, a $950,000 4-unit building in somewhere like Glover Park, where that's about the market range. You move into one of the units yourselves, you rent out the other 3 units, and you could possibly, depending on the rental income of the property, could live pretty cheaply. It's a great opportunity out there for some of you looking to invest in not only a home, but an investment property as well that you could possibly move out of at some point in the future. There'll be some more information on here. I don't know what day Layla's going to be on the show next week, probably sometime around Wednesday or Thursday. But I would say it's definitely an option for people out there. And FHA has gotten a bad rap over the years as the government-backed program, but it seems to be one of the strongest routes right now. And it's also an exploratory feature for all of us. Obviously, for the last 8 or let's say 5 or 6 years, we've never even had to explore this route. Conventional
left turn in 2 miles.
Conventional loans were plentiful, and jumbo loans were too. Not to say that it was good or bad, but they existed, and now they don't anymore, basically, for a lot of the buyers out there, and especially in some of the more severe markets like Florida, for instance, where property prices are falling like a rock from the sky. But in some of the other stable areas like DC, FHA seems to be a good option. So if you have any questions, send me an email, and I will put up a post as well, or at least a link below this, to let you guys know when we'll have a mortgage broker on the show, and they'll talk a bit more in detail about where the market is, so you have a first-hand experience and can comment and respond firsthand with someone who has a bit more knowledge about that. We do, obviously, we're realtors, so we have a different position. But if you have any questions, I'd love to hear it. If you have any comments, please comment. Let me know if you guys have been in similar circumstances. Until tomorrow, thanks for watching. This has been Jesse K with BuildingDC.com.